Hello and welcome to Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The situation remains relatively calm along the Indo-Pak border, but Indian forces on high alert. Prime Minister Modi meets Air Force personnel at Punjab's Adhampur Air Base. Army sources say 3 Lashkar-e-Toiba terrorists were killed in an operation in Jammu and Kashmir's Shopia. Defence Minister Rajnath Singh reviews the security situation at the border. Sources tell us the DGMOs of both countries agree not to initiate any aggressive action against each other and also commit to a reduction of troops along the border and forward areas. Indian equities take a breather after Monday's breathtaking rally. The Sensex and the Nifty dimp around 1.5% each, but the mid-cap index continues to trade in the green. The rupee strengthens against the dollar but is off early highs on dollar buying by importers. Cipla meets the street estimates in Q4, net profit up by 30% on a year-on-year basis. FY25 margins come in higher than the company guidance. Cipla announces a total dividend of 16 rupees for shareholders. India warns the World Trade Organization it's considering imposing retaliatory tariffs on certain steel and aluminum products imported from the US, says the move is aimed at countering the Trump administration's imposition of 25% levies on Indian imports, adding that America's measures would hurt $7.6 billion worth of India-made products imported into the US. Trump signs an executive order that cuts prices of some medicines in the US to align them with those paid in other developed countries. Trump says the order will apply to medicines procured via both the commercial and the public healthcare system, but does not disclose the exact medications that the order will apply to. President Trump lands in Saudi Arabia on the first leg of a 3-day tour to the Middle East, holds talks with Crown Prince Mohammed bin Salman, covering a range of issues including investments, defense, regional security and Riyadh's civil nuclear program. Trump will head to Qatar and the UAE next. Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice B.R. Gavai to assume the office of CJI tomorrow. Well, we bring you the special State of the Economy show. Retail inflation numbers coming in for the month of April, dropping to 3.16%. That's the lowest print that we've seen since July of 2019. And the fall in inflation driven primarily by a fall in food and oil prices. Latha is standing by now to take us through the inflation internals. Latha, good news there on the inflation front.
Well, the inflation number clearly, even for the month of April, coming in below street expectations. The average expectation was about 3.2. A goodish number of our respondents indicated 3.3 as well. But there were a few people with a sub-3 number. So the average was working out to 3.2. At 3.16, it is a tad below expectation. And it is the lowest reading since July 2019. So that makes it important. The fall in inflation is also important because it doesn't come off any high base. The year ago inflation for April of 2024 was 4.83. Now, that's not really a very high inflation number. To get to 3.16 over that number is important. It is clearly indicating a fall in prices. You can see it very clearly in cereal prices. For instance, vegetable prices normally start inching up in April. They have not done so. And of course, the number is 3.16, despite an increase in milk prices announced by Amul or Mother Dairy. Despite that, we've seen a 0.4% rise in month-on-month milk prices. We also saw LPG prices. I mean, that was much publicized. LPG prices rose. In spite of both these increases, we are seeing a 3.16 reading. So that clearly means inflation is running below the Reserve Bank's trajectory. Let's get our experts to weigh in on this. We are joined by Aditi Nayar, the chief economist at ICRA, Sakshi Gupta, the principal economist at HDFC Bank, Anubhuti Sahay, the India head of economic research at Standard Chartered Bank, and Devang, Shah, the head of fixed income at Axis Mutual Fund. Ladies and Devang, thank you very much indeed for your time. Let me start with you, Sakshi. What have you made of the numbers at 3.16 below your expectation?
So, Latha, we were at 3.11, so it is close to, our expectation. I think, I think the street was expecting a low inflation print this month. I think what is encouraging in this print is the fact that on the food inflation side, if we move beyond, vegetables, which tend to be very, very volatile, of course, they've also kind of gone down month on month in April. But I think what is encouraging is the continuous decline in cereals and pulses inflation, right, which has been going on for some month, and that kind of continued. I think this bodes very well for the future, prints on inflation, and we are tracking inflation to be between this 3.2%, in the next two prints as well.
Okay, you would express the next print to be 3.2, you're saying?
Between 3 to 3.2%, I think the next two prints on inflation that we would get, we are anticipating that it's going to be close to, this range.
Okay. Aditi, what are your readings? The important number next month as well, or rather this month, May, the base remains the same, 4.8 for May of 2024. So it's the same base you're getting for April and May, around 4.8. But in June, it goes up a little over 5, the base. So I did get a few people telling me that for the month of June, they would get an inflation number which is closer to 2 point something. There are some people who are even guessing it's much closer to 3. What is your trajectory from now on?
Thanks, Latha. So our trajectory is a little bit different. What I fear is that while the first half of May we've seen very benign vegetable prices, temperatures certainly in the north have gone up very sharply in the last couple of days. So that seasonal uptrend in vegetable prices may still be ahead of us, and the intensity of that is something that we need to watch out for over the next couple of weeks. That is something that could lead to the May number being a little bit higher than the April number. But I do think that we're going to get a dip again in the June print. So the June print would be closer to the 3 to 3.2 that Sakshi just spoke about. But I do expect the May number to pick up a little bit, which is going to be a transient reading. On the whole, we are looking at about a 3.5% CPI inflation average for this year, and for the prints for Q2 and Q3 to be significantly lower than what the MPC had last indicated.
Okay. Anubhuti, Sahay, I think the RBI number for April, May, June is 3.6. Is your expectation that the April, May, June actual number will be way below that 3.6 that Reserve Bank forecast?
The probability is definitely high, Latha, that we might see an undershoot in MPC's forecast of 3.6% for Q1 of fiscal year 26. That undershoot can be anywhere between, like 20 to 30 basis points. We will have to see. I think the food inflation trajectory is very benign. While there is a wide acknowledgement that probably the fall in food prices on a month-on-month basis is now behind us, the fall has been significant, and that will keep food prices very well contained. On top of it, the global commodity price environment is also likely to keep core inflation, excluding gold, pretty much under check. So I would, I would say that there is a high probability that we might see an undershoot vis-a-vis what MPC has forecasted for first quarter of fiscal year 26.
Okay. That will have very important implications for what the Reserve Bank might announce. Incidentally, we have to take on board the fact that this is the last inflation number that the Reserve Bank gets before it goes into the policy in the first week of June. And if, like all of you, the Reserve Bank goes with the view that April and May is going to undershoot its own forecast, then that will have important implications for its policy. But before I come to Devang on policy implications, let me just go through the internals. Cereals is up 5.3% year on year, but importantly, cereal prices are lower in April compared to March. Pulses prices are also lower compared to March, which is the usual form. But what is surprising is vegetable prices are lower compared to March. Usually you start seeing a little bit of inching up in April. So that is the positive surprise. And of course, on year-on-year levels, vegetables are down 10.9%. So that clearly is the surprise element. Among the negative surprise elements, of course, have been fruit, which is up 13.8%, and oils and fats, which have been a bugbear for some time now. They are still factoring in the rise in import duties, and that continues to remain high, 17.4% higher. We must look at the core inflation numbers as well. The miscellaneous numbers, which reflect services, is up 5%, And there it is the gold prices. I mean, core inflation itself has come in at 4.2. But over there, gold prices push up that element. And X of gold, perhaps it will be more like 3.5%. Sakshi, any more thoughts on that core inflation numbers?
Well, Latha, I think, a couple of months back when we were talking about core, we knew that, we had kind of hit the, bottom for core inflation. And because of the unfavorable base effect, of course, we will start seeing core inflation inch up. And as you rightly mentioned, I think gold prices continues, kind of to be the primary driver on the core inflation front beyond the base effect. I think if you look at all the other categories within core inflation, they've remained pretty much flat, and we haven't really seen a major increase within the core basket. I think going forward as well, our expectation is that core inflation kind of averages for FY26, somewhere between 4.5%. This is, of course, assuming that you do not see a significant increase in risk sentiments that leads to a further increase in gold prices. But our base case right now is that core inflation fairly remains manageable between this 4.5% range for the year.
Okay. Anubhuti, would you want to look at any of the internals of the food items? Are there any surprises which gives you a sense that inflation will be lower than expected for the year?
I think, the point which Sakshi mentioned about cereal, I think that is the biggest surprise for us. We got a downside surprise when it came to food CPI, and that primarily is from cereals. If you look at the cereals index on a month-on-month basis, I'm not talking about YOY, usually they are the episodes where cereal index falls on a month-on-month basis are rare. And this time, the fall is massive, minus 0.6%. We were expecting a minus 0.1%. So I think this is a very, very positive development because cereals has been a pain point for quite some time. I think the fall in pulses has been pretty much there. So I won't take it as a new piece of news. The same is also true for spices. So I think the cereal is the most important bit, which we'll keep an eye on going forward.
Okay. Aditi, what's any further observations on the food inflation? I mean, 1.78, I can't remember when we last had that number. I'll have to look up all the past data. But, I mean, the overall inflation itself is at a 6-year low. What's your sense for the full year inflation number? Will it undershoot the Reserve Bank's 4%?
I think it definitely will. Of course, there are many sources of uncertainty. One is how the inflation turns out. When does it start? How is the distribution, both in terms of time and geography? And then, of course, all of the external risks that we're facing with both tariff and geopolitical. So all of this can have an impact on how the CPI inflation trajectory pans out. However, we are now looking at an average of 3.5% for the full year. So significantly below the MPC's medium-term target of 4%. And that is clearly opening up space for more rate easing going ahead.
Oh, it does. It does open up a lot of place if it is indeed 3.5. But before I come to Devang on that, Anubhuti, what's your full year number?
So we are, closer to 4%, but with a continuous downtrend in food CPI and the global commodity space dynamics, we do see downside risk to it.
Downside risk to your 4% number. Sakshi, where are you at?
So we are expecting 3.7 with the further downside, risk for our forecast. So I think if this trend on inflation of being, close to 3.2 kind of continues for the next 2 months, then I would kind of pivot closer to Aditi's forecast, which is 3.5. But right now we are at 3.7.
Okay, in that case now, Devang, what is the expectation from the Reserve Bank? Will it be just another 0.25%, or are you expecting more dovishness?
So our perspective is that obviously, I think 25 basis is surely given in this policy. I think for looking at the CPI number, and as the entire panel is talking about that, the expectation on CPI for the next couple of months continues to be on the lower side. I think 25 basis is given. Probably he'll continue with his liquidity measures, and I think he has already done a lot of liquidity measures. So local macro factors are all very, very positive for bond yields. And I think the important factor which markets will also be looking at is, I think, two things. One, what's the GDP print which gets released on the month end for the last quarter, because that will probably give more assessment on how the growth trajectory is panning out. I think inflation, even RBI is comfortable for the year, and that is why they were quite dovish. But looking at the important factor would be growth. And the second variable, which is probably keeping markets a bit concerned, is what's happening on the global front on the yields. Because US Treasury yields are continuing to remain on the higher side despite all this tariff uncertainty getting reduced. I think we have not seen too much of yields on the global front to lower. So our perspective is, I think these are the couple of things which market will look at. But looking at the CPI trajectory, 25 basis is for sure given. We believe that the terminal rate will be closer to, or in this cycle, the terminal rate will be closer to 5.5 on the repo.
5.5. That was the consensus the market was going with. But now that the annual inflation, FY26 inflation, is seen undershooting the Reserve Bank's 4%, now it looks like a given that it has to be, Anubhuti is giving a downside, but she herself says it could go all the way down to 3.5. Even if you take it as 3.7 and you add the 1.5%, real rate, which neutral rate, which Reserve Bank wants to add, then, we are looking at 5.25. So that question to you, Aditi, do you expect that the Reserve Bank can go to 5.25 in this cycle?
Yeah, Latha, I think so. So basically, we are looking at 25 basis points as a given in the upcoming policy, just as Devang said. In case we are seeing a GDP print for Q4 where there is no acceleration from the Q3 print, which was 6.2%, then we can't rule out a front-loaded 50 basis points rate cut in the upcoming policy. Otherwise, our baseline right now is 25, 25, 25 in the next three policies.
Okay, so 75 basis. I think today the Goldman Sachs expectation also was 75 basis more. What about your guess, Anubhuti? How many more rate cuts?
Latha, we are sticking with our rate cut call of another 50 basis points. I mean, I cannot deny the possibility of more rate cuts from 5.5%. Having said that, I think there are a couple of factors which we need to keep in mind. One, just couple of months of negative surprise on vegetables. 2 months of bad increases in vegetable prices can very quickly take us back to 4% average of CPI inflation, and couple of months of negative surprises on vegetable has become more of a norm than a rare thing. So I think that is something which we all have to keep in mind. The second part is on the global backdrop. The global backdrop is not as bad as it used to be before or till Friday. And given that global rates are higher, I think while the local dynamics will play a role, RBI will also be cognizant of what's happening globally. I think a lot of support for growth is already is been pushed via ample liquidity, and I think that will remain the main channel. At this point, we are still holding on to our view of 5.5%, and unless growth continues to decelerate, then it's a different scenario that we might see more rate cuts coming forth.
What is your Q4 GDP?
Latha, so we are looking at an average of around, I think, 6.5%.
Okay. Fine. I'll leave you to it. I guess you have to still finalize your numbers. What's your number, Sakshi, in terms of GDP, and what is your end repo rate expectation at the end of this cycle?
So, Latha, on GDP for Q4, we are estimating 6.8. And that brings the full year FY25 number closer to 6.3. For FY26, again, for growth, we are currently at 6.3% overall for the year. In terms of what this means for RBI policy, our base call is for the repo rate to go down to 5.5%, with a rate cut in the June policy of 25 basis points and then another rate cut in August. Beyond that, I do believe there is space for the repo rate to go down further. But I think that would be a function of what sort of, not so much what happens to inflation, but in my opinion, what happens to domestic growth? And if there are signals that in the first, quarter or first 3 or 4 months of FY26, growth has meaningfully, kind of moderated, then I think it opens up room for another rate cut and a move to 5.25. But right now we are at 5.5 as a base call.
5.5 as a base call. So, Devang, do you expect that the market will react even more for the inflation numbers? Do you think anybody will pencil in a double cut in June at all?
So my understanding is that markets have already done that. So as you have seen that last 1 month, yields have rallied by more than 15-20 basis. Like last time when we spoke on the CPI print, yields were at 640-ish. Today they are at 6. The new 10-year is at 627.28. So yields have rallied quite a lot. In the last 2 months or so, yields are 30-35 basis lower. Our perspective is that local factors, as everyone highlighted, I think lower CPI, OMOs, ample liquidity, plus this entire dividend which gets announced this month. All of these factors will be very, very positive for bond markets. So yes, rally can continue. But as I highlighted, I think because global yields and if there is a delay in the Fed rate cut cycle, I think markets will start pricing in probably that RBI response can be also be slow and gradual and would be dependent on the outlook on growth. So because RBI has been so forward-looking, I think yes, 25 basis is given. I would still stick my neck to 25 and not go for a 50 basis. Markets on the swap curve are already pricing in 50 basis of cut. So over the next 2 cycles. So I think probably 25 in the June policy is what is our base call.
Okay. You're saying the markets are pricing in a 50 bips cut over 2 policies.
Yes.
They're not penciling in a 50 bips in June itself.
No.
Okay. Anyone here expecting a 50 bips from RBI in June? Aditi?
Latha, only if we get a negative surprise on the GDP print for
GDP.
Q4. Yeah.
Okay, but if the GDP number, as Sakshi says, comes in at 6.8, which is cannot be ruled out, considering that there is a positive base impact as well. So chances of a slightly better GDP number coming in remain strong, and therefore the Reserve Bank perhaps will not move. And in any case, it's not as if growth is limping so much that a double cut is needed. As Devang points out, one has to keep perhaps a bit of a eye out for the global factors as well. At the moment, the dollar flows are not impeded at all, and interest rate differential will have to be looked at differently because the inflation differential is looking very different. I can't remember when for the last time the inflation difference between India and the world was as narrow as it is today. Probably you have to go back to the COVID times or even earlier. It's such a narrow inflation differential that perhaps the Reserve Bank will take the courage to, allow for deeper rate cuts. But just a final point, Sakshi, to you. Do you think that the Reserve Bank should also worry that this year we have a very positive, base effect and a whole host of food inflation positives, but we may not be able to repeat a sub 4% number next year as well for inflation. And therefore, going all the way to 5.25 would be a little adventurous, would you say?
Yeah, no, Latha, I absolutely agree with you. Not just for next year, but if you look at most forecasts, even for Q4 of FY26, because of base effects, inflation is going to move above 4%, right? So that is why, that is one of the factors, why we think that if growth is broadly, between 6.5 on average, right, over the coming quarters, I don't see the need for the RBI to, as you said, be adventurous and kind of deliver, excessive rate cuts. Because if you look at projections for FY27, we are tracking inflation to be, just based on base effects and making some assumptions on monsoon, inflation could be closer to, 4.7, 4.8. But that is for FY27. So I completely agree with you that I think that at this stage, it seems that the RBI would perhaps be a little bit more cautious in where it's taking repo rate and where that terminal rate is. keeping in mind forward-looking, inflation, not just for the next 3 or 4 months, but, 3 or 4 quarters and beyond.
Okay. Well, thank you very much, Aditi, Sakshi, Anubhuti and Devang for parsing the numbers for us. The key takeaway from the inflation number is that it is below the market estimate by a smidge. The market estimate was 3.2. So it's a little below market estimate. It is way below the Reserve Bank estimate. The Reserve Bank estimate for the 3 months, April, May, June, is 3.6. Chances are that this 3.16 gets repeated for May as well. If you look at the first 15 days data, which most people are going by, then we should have a 3.2 perhaps reading. And therefore, for April, May, June, the Reserve Bank's reading 3.6 is at least 30, 40 basis points higher than what the reality will be. And therefore, the June rate cut itself is a given. What are the chances that the rate cut goes, the end rate cut is taking the repo rate below 5.5? That is where the debate comes. If the Reserve Bank indeed took it to 5/4, then you have a possibility that by the time you come to the fourth quarter of the current of this FY, already the real rate will start looking much lower. So perhaps the Reserve Bank will stop at 5.5. That is the debate. The debate is not there for a rate cut. There is no debate as to the trajectory of the inflation. It is going to remain below 4%. If anything, the Reserve Bank will have to revise lower its full year forecast from 4% to perhaps 3.8 or thereabouts. Therefore, we are going to see a 5-quarter come in very soon. Maybe the Reserve Bank will not take it to 5/4 just yet, considering the fact that we could be seeing 4% plus inflation in calendar 2026. But that's a long way off. For the moment, it's good news from the inflation front. On that note, we wrap up on this edition of State of the Economy. Thanks so much for watching. More news and headlines lined up for you after the break.